My guest today, a repeat guest from Dunn Capital, CEO and owner, Martin Bergin, or as I have known him for 40 years, Marty Bergin. This year is a special year for Dunn Capital, one of the most acclaimed, long-standing trend following traders ever. Their 50th year, 50, celebrating 50 years of trend following. Yeah, trend following doesn't work, right? I always enjoy catching up with Marty, and I hope you enjoy this conversation. And like I often say, if you can't learn something, even if it's the unexpected, because Marty and I go into a lot of different areas from trading, from trend following to business to life. If you can't learn something, there's something wrong with you. I hope you enjoyed this conversation with Marty Bergin. I went back early on, and we're going to go back into the very beginning start of Dunn and Bill and everything. When I first found out about him and met him through you, I started doing my own research and everything. And I actually went and found his Northern Virginia home where he first started his first CTA just to take a picture of it. Because at that point in time, when you don't know what's going on and you don't really understand it, you want to kind of frame things like, how did one of the most successful traders ever start in that house? This 1970s kind of typical house in Northern Virginia. And I actually went and found it and took a picture of it just because it was like on one of the original documents from the 70s when he was listing his firm.
Do you remember the neighborhood that it was in?
Was it Mantua?
I think it was the neighborhood that had experienced the petroleum leak from some tanker farm that wasn't far from it. Evidently, it had leached down into the groundwater and had gone under this neighborhood. I know after he had moved out, they had a big controversy there about the petroleum levels and things in the soil.
It's such a great starting point because it's like you build up to a company over approaching the 50th year. The starting point was a suburban home.
Yeah, the basement of his home with his kids doing a bunch of the punch cards.
That is a classic, great American story.
Yeah. And it was truly a family business to start out. Not that the kids probably enjoyed that, but Bill being Bill, he didn't give them a choice. They had the punch cards and then they would take them over to the library or they would rent time on a mainframe and process them every weekend. That was how it all started. It's pretty amazing. 50 years. And how many CTAs still get through that first transition? Because the founder of these businesses tend to have huge personalities. And what comes with huge personalities is they're not very amenable to passing that on to somebody else who they think can do it justice. Nobody's ever going to be good enough in their eyes. That was the one lucky thing that Bill and I, because we worked well together.
You had the bond.
And there was a mutual respect because I came out of a different industry. You know, I was a CTA working for a firm there in Vienna, Virginia.
CPA. I have to correct you because you were not a CTA at that time.
Did I say CTA? I'm a CPA. Sorry about that. And anyhow, so we were doing the accounting work. And because I came out of a different industry, became the partner on his job, there was a certain amount of respect through business. When he asked me to come aboard, I think that kind of put me in a different spot than other people. Because from the beginning, we worked together, even from the first day that I came to work here. Because I not only were working on Dunn Capital stuff, I was working on Bill Dunn stuff.
Trusted confidant.
Exactly.
To say the least. Let me take it back to something that I was thinking about before I got on the call with you. Bless him, great book, a lot of big names in it, but probably the biggest trading book is the first Market Wizards book with a lot of names in there that people know. The interesting thing, and this is no knock against Jack because he sold millions of copies, and a lot of those traders in that first market Wizards books were trend following traders. But, and again, this is not a knock, Bill Dunn should have been in that book.
Oh, there's no question about it. But you got to also understand that Bill didn't want the notoriety. He was like the guy that was doing all this stuff that nobody knew about, except a few people in the industry that had already experience with trend following, Heinholt being one of the big players at the time, who recognized it, found him, opened up an account, and that was kind of the beginning of the real story. I mean, his first account was family and friends, people he worked with who had respect for his knowledge, and they funneled their money together and opened an account. That was his first trading account. But the first institutional money came from Heinholt, who then introduced him to a number of very large allocators who then allocated. But think about it. Bill never reached out. He never asked for money. He never went out there and tried to raise money. It all just came to him.
Well, the performance had something to do with that.
Well, the performance did it in Bill's old adage, which was, if they're smart enough to find us, they'll find us. And if they don't find us, then we don't want their money because they're too stupid. Now, that is not the way to build a business. I'm sorry.
It's a really interesting thing you say, because for people listening, you guys are a very successful CTA, over $1 billion under management. However, there are other trend following traders in the world, and they do have much bigger staffs and perhaps bigger money under management. And they perhaps carry, I don't know how to say this, not more corporate. You guys are as corporate as they come, but there's something where the ethos of Bill is still in your company.
There's no question about it, because Dunn Capital is different. We're not a corporate entity, and we don't want to be a corporate entity like everyone else in the business or like the majority of the big players. The difference is we want to be as good, if not better than those people as far as generating returns, but we don't want to have the same attitude about the way we do business. First off, we're so customer oriented, which was always Bill's staple. He wanted to be on the same side of the table as the investor.
Remind people how that manifests itself in terms of your fees, how you guys make money.
Right. So we don't charge management fees, because Bill always thought the worst thing you could do is lose people's money and then charge them for it. If we're losing money, there is no expense to the investor. The only time they get a fee is when they made new highs on their account. And then we take 20% of whatever they made. And if we lose money, we have to make that back before we charge them again. So if you think about it, we wouldn't still be here today after 50 years unless we were continuing to grow people's accounts. It's not like you make a bunch of money and then you just ride the laurels of making that money and you're flat the whole rest of the time. We have to keep performing. So that means we got to keep working hard. We got to keep doing the research. We got to keep making the developments and trying to come up with something new or something special all the time. Now, there's not a lot of new and special in trend following, but risk management techniques, portfolio development, things of that nature can make a difference. And we also put all our own money in this thing. Two things: it's incentive only fees, and a manager that has a big amount of their own resources trading the exact same program that our investors are in. People like that. They like to know they're in it with you. Whereas, how many times have you talked to CTAs? How much of your own money is in it? My whole business is this, so I need to diversify. So I invest in stocks, or I invest in real estate, or I do this and that. If you don't believe in it enough to put your own money in it, then I'd have to ask the question, why don't I invest in the stocks then?
50 years, there was different segments of the trend following CTA world that were stimulating me, but you were one of the key ones back in the mid 90s because you introduced me to Bill. It's interesting in the sense that when I first started trying to explain this to people, it was always this sense of people don't know about it, or they want to argue about it, or they don't understand it. Now, all these years later, with your firm being the size that it is, other firms being the size that they are, clearly there's institutional players that know all about trend following. They've got their probably assorted reasons for why they make an allocation. But I still think it's one of these strategies that flies under the radar for most people. The average smart doctor or the average smart attorney has never heard about trend following.
If they've had some experience with it, they usually go away with a negative taste in their mouth. And I always ask myself, why can people not get comfortable with what seems so common sense to us? People like yourself, people like us who have been around it our whole lives and who see it every day and understand it. And I think the problem is people are not comfortable with the flow of revenue. With equities, they like that constant new highs, everything's going great. And then when it collapses, and the rare times that it collapses, it seems to be rarer more and more, everybody's in the same boats. They don't feel so bad.
It's all relative.
Right. Well, what happens with trend following is you have these long periods of underperformance. Doesn't mean you're not making money, but you're not making money as fast or as easily as the equity markets are. You're just, equities are up 10%, you're up 8%. People look at that and they say, why am I investing in this? It just doesn't seem to ever catch up because we tend to make money lumpy. So we make a ton of money and then they're all happy and great. And it's normally when equities have a really bad time. So people love it at that point and they rave about how smart they were to invest in trend following. But you have these long periods where it's going flat or it's performing, but it's not performing as well as their other investments. That's the point in time when you have to have them understand why they have the allocation. Now, I think the institutions have gotten there. They will keep the allocation even when it's underperforming. But large family offices, the individual, they just look at this and go, why am I doing? Even a lot of the nonprofit type players, the endowments and things, these guys have to go back to a board who isn't as understanding or have the financial wherewithal to understand why trend following is there and why it's important. They're just looking at this. Why do we have this underperformer in the portfolio? We need to cut this loose and allocate this to another private equity allocation.
When you're doing this 30 years from now, is it going to be the same story?
Yeah, probably. The private equity world is that we could do a whole show on private equity and the problems that at some point are going to come to play.
Ponzi equity.
Oh, absolutely. And I like this second generation funds they're now launching, where they take investors' money and they buy out the private equity that they can't sell into a new fund. So these new investors get to buy their dog that they couldn't get rid of.
You bring up the idea of like why trend following. And what I'm about to say is not the only reason for it. If we look at the modern world, deficits, debts by, for example, something like America or China, you look at increasing the money supply to give away free money during COVID time, inflation. You look at the past, going back to the dot-com bubble, even in 2020, there is a risk for equities collapsing. And I think that that's not the only reason why one would want trend following. It is a strategy for people that understand it's an imperfect world. Okay, fine. If somebody just wants to trust the system, to tuck them in at night, take care of them, nothing's ever going to go wrong. You work your whole life, and then maybe there's a 70% drawdown in equities, and you're sitting there going, what the hell happened?
You're right.
This is where your world plays a role.
Yeah. The thing that I try to get people to understand when they talk about diversification, and it's the only free lunch. That's kind of true. But what's true diversification? You look at everything there is to invest in, and there's really only a couple things or a couple sectors that are truly diversified. One of which is managed futures, and the trend following systematic nature within managed futures is truly diversifying. There are a few other things, but if you go back and you look at crisis in the United States and when equities have taken huge hits, and you look at how every investment class out there, they all become very correlated during crisis environments, all to the downside. Everything looks the same. It doesn't matter what you invested in. You didn't diversify like you thought you did. But managed futures is exactly the opposite. It tends to do really well in those environments. If you want a true diversifier, it's just common sense to have an allocation to managed futures. And the allocation can't be so small that it doesn't make a difference. You have to actually be committed to it and allocate a certain amount of your risk. I would say, if you look at all the stats and everything, it's a minimum of 20% of your risk. That doesn't mean you have to allocate 20% of your assets. You just have to have a managed futures product that trades with a little volatility so that your risk is at 20%, not necessarily your assets.
Speaking of diversification, a slightly different way to think about diversification and to use one of your more successful trades in 2024. When you woke up at the start of 2024, you said to yourself, Martin Bergin, you know what? I know this year we are going to make a lot of money in cocoa. I predict that, right? But that's not what happened. That's not what happened at all. But it was part of a diversification that you never could have expected. I mean, you could have expected it in the sense that, yes, any market can go off if it's one of your markets that you're following.
Yep.
That's a great example of diversification that you had no earthly idea that was going to pay you in 2024.
Nor do we ever approach life that way. I will tell you right now, Bill would tell you during his time running the company, we are not here to predict the future, nor do we try to predict the future. We will tell you anybody that's predicting the future for you is lying to you because there is no way to predict the future. The only thing that we can control or predict is risk. And the only thing that we try to control is the risk. We let the markets dictate the profitability in the future. We're just going to follow the price, go where the market takes us. You don't have this emotional attachment to your trades. I just love it when guys will have a target sheet or their analysis is that this is a great stock and we're just going to hold on to it. We don't care how bad it gets.
To also use a phrase, I hope I remember it correctly because he let me put it on the front of one of my books. We don't make market predictions. We just ride the bucking bronco.
Yes, that sounds like a quote from Bill.
Let's keep it at Bill for a second. We talked early on in the beginning of this conversation, some of the early process, but share with the audience, because you guys are really close and you had ultimately know everything. How did he have his first moment of realization? Oh, wow, this is a strategy. How did he piece that together?
He actually read an article about trend following. It's basic math. He was a PhD in physics. Science and math was important to him. He understood those things. I thought, well, this is a way to invest that makes sense. It's scientific in nature. You don't have any emotions or decision making involved other than how's the math work, and it's going to tell you when you're going to buy and sell. The problem was how to take this concept and apply it to the markets. His original attempt was looking at stocks, looking at the stock market. But the environment was so large that you couldn't process the data in a reasonable amount of time to actually be able to trade the next day. He had to find something that was a smaller environment that he could trade within. He heard about or was talking to somebody who suggested futures, which at the time was only 12 markets, I think.
Well before stock futures, well before financial futures.
Yeah. So you're just talking about commodities. Everything was in Chicago and New York when he started, basically. He applied it to the futures markets. Hey, this will work. Now, the problem is you got to have some money. You can't just take your $10,000 and get a portfolio. You have to have some real money. He didn't have that kind of money. He was the father of 3 kids and was married and just trying to make meats.
Late 30s, probably.
No. So that's when he was born.
His age at that time, late 30s, when he was starting.
Oh, yeah, probably. Yeah. He'd been in the military, so he might have been a little older. He had gone back to school on the GI Bill, got his PhD, and was working in the defense industry at the time. He was fairly well regarded by his fellow employees where he worked. Those guys were the ones, his boss, and a few of the other upper level people in the company he worked for came up with this idea, hey, we're going to give you the money, and you go out and do it. They basically developed a fund. They all put their money in, and Bill started trading. And that was the beginning. When he came out of the chute, they lost a bunch of money right off the bat, but stuck to the system, which is the key. And a lot of CTAs that fail is because they don't trust their system, which means they didn't trust the research they put into the system, and they violate the system because they're losing money.
One of my favorite trend following traders, a little bit younger guy, is Paul Mulvaney.
One of my favorites too.
Paul has very openly said on my podcast, I'm almost positive that his influence was Bill. That was his inspiration. And I think it was some mid 90s articles, something of that effect. And it was seeing what Bill was doing for absolute returns was like, oh, wow, I'm inspired by this.
Truth be told, we have a good relationship with Mulvaney and their firm and respect them very much. I hope they have equal respect with us. I do like the fact that they've stuck to the old school type trend following. They don't vol adjust their positions like everybody else does, but it's hard to get institutional money unless you do these things. You want to talk about Bucky Bronco? I mean, Mulvaney, that's the Bucky Bronco.
Early Dunn, okay.
Absolutely. Same thing. They're willing to say, hey, we can only trade a certain amount at the volatility we trade. And when we get there, we're going to cut it off and we'll send the money back. As long as they keep making new highs, which they have, they wouldn't be in business today if they weren't continuing to make profits, just like us.
Once you understand it, there's a certain percentage of the population of this planet that is not designed to understand the idea that you, Martin Bergin, at Dunn Capital, that you and your team have an approach that allows you to trade cocoa or gold or the stock indices or whatever without having any fundamental information about those markets. And that is just something that most people are never going to wrap their arms around. I've realized this now after many, many decades that it's just a very difficult concept. Of course, there's going to be plenty of institutional players that get it, but the idea that you guys have devised a way to trade simply off the price is just one of the most revolutionary, interesting, clever, smart ways to make money. It's never bored me with the idea of how that was figured out. And not just your firm alone, but others, but it's still just an amazing concept.
That's a Bill thing. The whole idea behind it is, Bill would say, is people vote with their dollars. Every bit of information that's available for every commodity is built into that price because every person that buys or sells that is working off of information. And in our case, the information we're working off of is the price moving directionally up or down. That's all we care about.
But there's still this aha moment for most people that I don't think they're ever going to have it because there's something about that idea.
It's because the story's not interesting. That's all you do? I want to hear a story about how the inventories are affected by this, and this person is doing this. And every great stock buy is always based on some great story about the stock. We don't have a great story. We got a great story about the firm, about Dunn Capital as a group of individuals that do this. What we do, our system, is a mathematical formula. It's not a great story. It's not complicated either.
You must occasionally, in these interesting high society groups that you run in, there must be these moments where you're approached by the titans of industry, the top litigator, the wonderful surgeon. They must approach you occasionally, or maybe you've ruled them all out of your life by now. But there must be people that occasionally find out what you do. They make assumptions, and you have to either strongly or gently correct them. And there must be some times where you see the eyes glaze over.
That's kind of a waste of time. I just let people take their assumptions and move on for the most part. If people are genuinely interested, I'll explain to them as best I can what we do. But like I said, it's not easily understood unless you've experienced it. One of the interesting things we do, which I don't think I've heard any other firm do, but if somebody opens an account at Dunn, they actually have to have a conversation with me before I will let them invest. Now, the conversation is twofold, basically. One, that I am comfortable that they understand the risk of investing with us. Part of that is that they understand the approach and what the expectation is going to be going forward. And if I'm not comfortable that they understand that expectation, then I won't approve them to invest.
Okay, not naming names, surely you've said no to people.
Usually the way it works out is after I explain to them how they're going to lose all their money, a lot of times what happens is they go, well, I'd like to think about it. I'll get back to you. And you don't hear from them anymore. There's only been one time where I've said, I don't really think this investment is for you. There was some back and forth. Finally, they kind of agreed. But it's very rare. What it does do is we don't get phone calls with complaints about performance, even when we're doing poorly. They don't call and complain. A matter of fact, what tends to happen is people call and ask, what's the procedure for adding more money? Because they understand there's going to be underperformance. They understand why that occurs. They understand that the big picture of their portfolio, this is important. I think because of that, it makes our jobs easier, makes our life easier, and I think they have a better comfort level. The other thing is you don't want an investor going out. The worst case scenario, they invest with us, they have a bad period of time, they cash it out, and they go around telling everybody that'll listen to them how bad Dunn is. I lost all this money with Dunn. I don't want that.
You're also an open book. Everyone can see what your performance is every month.
Yes, but people tend to rely on their friend down the street more than they do their own analysis. So, that's just human nature. And plus, I don't want to leave a bad taste in people's mouths. I like the fact that I sleep well at night.
That's half the battle with anything in life, isn't it, right? If you can't sleep well at night, it's probably the wrong thing to be involved in.
Right. Think about your choices in life. You're very happy doing what you do. I'm very happy doing what I do. They asked me, oh, Marty, when will you retire? I think they're going to have to take me out of this office in a box.
My father's still practicing.
See, you don't do that unless you enjoy what you're doing. I go to work every day because I want to go to work every day, not because I feel like I have to go to work today. And that's the culture that we've built here at Dunn Capital. Everybody that works here, it's all about the people. We're only as good as the weakest link in our company. It creates this atmosphere where everybody's rowing in the same direction and everybody's pulling for their fellow employees. People get up in the morning, they come here because they like coming here, not because they feel like they have to be there to get the paycheck. And that's kind of what we want to do.
I don't want to put you on the spot, but I tend to recall Bill saying something years ago that if a client called, I don't know if they got one call or two calls, for it was something to the effect, if they called once, okay, but if they called a second time, I'm sending them their money back. Something to that effect. I think that was Bill.
That sounds like Bill. There may have been some customers that didn't get through to him, so he might not have known they called a couple times. We don't really approach it that way today, although it's like any business. If you have a problem client, you have to rectify it in some way, either through education or it's not working out and you send the money back. And we have done it, trust me. We're allowed to cash anybody out that we want to with no notice and for no reason. We just do it. We give them notice. We either send them a letter, give them a phone call and say, look, we're sending your money back.
Let me bring up something about principles and trading principles, and you can bring it to firm principles too. But you've talked early on in this conversation, you mentioned we've had evolutions, we've had adjustments that we've made in our strategies, risk management, portfolio design, et cetera. But in terms of the principles, and you've also said this in this conversation too, but the principles of what you do, assuming Dunn Capital goes on for another 50 years, we can't imagine what everything's going to look like in the future. But assuming there's still futures markets, your principles are going to be ongoing.
No, that's exactly right. That is what's on me as the leader of Dunn, is develop the future leaders of Dunn and keep the core principles of what has made Dunn great instilled in everyone. And that's basically what we try to do. Bill built it. It was my job not to F it up. Hopefully I've done a little better than that because we've had our down periods too. We've built through that and we've come out the other end much better than we were before. We've gone through some trials over the years and we're a better firm because of it. And we've also now kind of built a structure that's more institutional, so the institutional investors are more comfortable. We just got SEC registration, which we would never have done before, because why would you take on those regulators and get involved in that? I've always said, if you can't do the business, you go and become a regulator, right? It's not like you're dealing with the sharpest tack in the room.
How have you guys navigated the crypto world?
We have ignored it for the most part. We do look at the data. We do monitor it. There's a couple key things that we just aren't comfortable with. First off, we want to deal in futures. We don't want to deal in hard currencies. What we've noticed is there's a disconnect between the cash price and the futures price within these cryptos. And we don't know where that disconnect is. And until we get comfortable with how that pricing is working, we're kind of going to stay on the sidelines. Am I saying there'll never be a Bitcoin future in our portfolio? No, I'm not saying that. I'm just saying we're not going to be the first to adopt.
One thing that's interesting about it too is that there's the commodities, the financial futures, there's an economic reason for these markets. I don't know what the economic reason is for Bitcoin, but maybe there is one that I don't understand. But to me, it just looks like a pure speculative play.
Well, I was a big fan of Bitcoin and the originality of it. I thought this was the answer to countries that just print money. This was going to restrict them. How many different cryptocurrencies are there now? 200. There's just one spins off, another spins off, another spins off. Clearly, it isn't. The theory behind it was great, but there's no limit to it. It's just as bad as central banks printing cash. I don't know how it helps anything. I guess back to the gold standard. Don't get me talking about inflation and government spending.
As I say to friends, associates, I can't predict when or how something's going to unfold. I've seen enough surprises to know it's impossible, just like you, to predict. However, what America is currently doing is not sustainable. I don't know when it'll stop, but it will stop at some point in time, or it will have a severe disconnect. When, I have no earthly idea, but it's not something that's built to last in its current format.
The only reason it's lasted as long as it is because we're the recognized world currency. If that ever changes, there's going to be a significant price to pay on that. Do I ever want to see that happen? No. If it does happen, Dunn Capital will do really well. Trim Folly will do really well. It's like the credit crisis in what, 07, 08. People were really hurting during that environment.
You guys did really well.
And we did really well. But you can't, when you're out, you don't talk about it. You don't go to the church and talk about how great you're doing.
We've already established that you're not talking about what you're doing much of people in this guy.
No, and that's exactly right. It's somebody's business what we're doing. As far as I'm concerned, I don't care if they know what I do or not. I'd rather people judge me based on who I am as a person, not by what I do from a business standpoint.
We've both talked enough over the years to know, and so my audience will know without us going into too much detail. And even though we've not seen each other too much over the years, I have a sneaky suspicion that we probably correlate on probably 99.9% of the issues. That's just my guess.
I'm pretty much an open book.
I wanted to make the comment earlier about Bill is that what's so interesting about him also, as you were laying out, that not only was he devising the trading strategy, he had to be the entrepreneur too.
Oh, yeah.
This is two things. This isn't just being a trader. This is risk taking, not only on the trading, it's risk taking on life.
No, we kind of put together a little short documentary that we'll probably release at some point over the next year or so, featuring Bill. We'll do a couple different things. One is to honor our 50th anniversary. We'll come out with something that'll talk about the firm, but we're also going to do something that talks about Bill. In there, there's family members who talk about Bill and his effects on their lives and things. And one of the stories was when he came home and told his wife that he was quitting his job to do this full time. His wife just started crying. And she sat down on the stairs and she goes, I'm pregnant. And it didn't faze him at all. He was committed to it and he did it. Look at the success now. The guy has a foundation that is set up for libertarian charities movement that's worth hundreds of millions of dollars. This is all because of this idea he had about trend following. I mean, he's been hugely successful. And everybody that's been connected to him has also been hugely successful. It's not just about him. He's taking care of everybody along the way.
Can I add something too? And even though I'm kind of like a distant connection, I would have to say when you're a young person and you're trying to figure something out like trend following and you meet a Bill Dunn, well, that's inspirational in of itself. However, if you meet a Bill Dunn and you meet him in his office and he's wearing a Hawaiian shirt and he shakes your hand and you realize that his hand is basically made of steel, that also affects you because you say for the rest of your life, I am never going to give anybody a handshake that is anything less than the handshake Bill Dunn gave me.
Yeah, he's known for that. And even in his later years, the last time I saw him and we shook hands, it was the same shake. I said, okay, Bill, don't hurt me. You don't need to bring me to my knees here.
That's a little thing. And I thank you for that because you introduced me to Bill. But that's a little thing in life. But I don't know. Maybe it's a big thing. And a lot of people, because I've shaken a lot of hands, most people have never shaken a Bill Dunn's hand because a lot of the hands that I've shaken over the last 20 years have been a lot of like, hey, man, you got to work on that. That's not good.
You're not making the right impression.
You're not making the right impression at all. What's your plan for the future in terms of like, obviously I can imagine, I can see your assets under management. I can see your performance. You're at year 50. You're not an old guy. You got plenty of time to keep going. So what do you envision?
We've actually had that conversation here, and we're trying to work through that right now. There's a couple things that happen. The perfect world would be to have somebody internally take over the business. How will you make that work? There's lots of different ways to make that work, but you also have to have somebody who's willing to take on that responsibility. The reality is, everybody here has been financially successful. They don't need that heartache. So they have to ask themselves, why would I want to do this? The same question was, why did I want to do it? Because if I didn't do it, then the firm wouldn't continue and everybody would have had to go their separate ways and done something different. It basically fell on me to kind of carry the tradition on and keep everybody together as a family. We did that. Trust me, it wasn't just me. It's because of these guys here that made it all happen. It's the people that are part of it that make it all happen. We have to twofold identify the people. There's plenty of people here that could do it. Then we have to identify who wants to do it. And then we have to figure out the process.
You can't retire yet.
Oh, no, I'm not retiring. Just like with Bill and I, the agreement we had originally was that we worked together after I purchased the company from him for 10 years. Now, 5 years into it, Bill wanted to accelerate the process. He said, one was things were going better than he thought they would. But secondly, he was starting to have some health issues. There were other things he wanted to do at that point. It's all hindsight's 2020. It's all worked out great. I wish he would have been here the extra 5 years because I really missed him, not having him here every day and being able to bounce things off of him and talk to him and stuff. It wasn't like he was far away. He wasn't involved the way I wish he was.
I didn't really have a plan for this conversation today, which you might have already guessed. But what I love about having these kinds of conversations when you don't really plan it is I think what we've ended up with today is a nice historical conversation, some trend following in there, you sharing this wisdom as a business person about how to navigate certain issues and giving people a sense of inspiration too, that if they ever want to, whatever it is they might want to try, is that there's no perfection, there's ups and downs. But I think your tone and your easy nature and being willing to share. A lot of people that I've talked to will come on and will talk only trading, which that's fine, that's great. But very few people will really come on and talk about the inner workings of, let's say, a business succession or the people. I appreciate that you're willing to share openly something different that most people don't say in public.
I think that's what's kind of different about Dunn is we're pretty transparent. And I hope one of the other things I got across was the culture of the firm and why we're tend to be a little different than a lot of the other. And the other thing is when you and I get together, it's not like an interview or there's any motive involved. It's just a conversation because it's not like we talk all the time.
People probably think we do.
They may think we do, but it's just because it's comfortable. I enjoy it and hopefully you enjoy it. I don't know if your listeners care or not, but
You brought this up early on with me doing interviews. Do sometimes things get stale? But as long as I'm curious and as long as it's somebody willing to share, conversation is always fun with humans. It's just that we've reached a point where I see, especially with younger people, let's say Gen Z, millennial, even Gen X like me, a lot of people they're hedging every word in their head before they open their mouth. Whatever comes out of their mouth is so sanitized and so just blah. Getting to your point about interviews getting stale, I think a lot of interviews out there are getting stale because people are just rehashing stuff. I know I'm willing to take some chances. I know I'm willing to fall down, which also is high risk, high reward, whatever. But a lot of people aren't willing to do that. I think they're literally like reading questions. I mean, I don't want to show you my notes because you might think I've lost my mind. It says your name and the time.
that's okay. James told me that this was happening yesterday. I said, you never sent me anything. He goes, yeah, I did. I said, no, I don't have it on my schedule. He sent it to me, but and I always enjoy it.
I hope I was painless.
I had to be at work on time. Back to your last comment, though, isn't that a function of social media? People are so, they get criticized so often by anything that you put out there, and they don't want to be criticized. Whereas my view, and this is something I learned from Bill, when you have enough self-confidence in what you do and who you are as a person, you don't really care. The way you can see that, and this is something I still need to work on, but Bill was great at it, is a person like that doesn't need to project who they are, what their intelligence level is. You go to a dinner or some social event with Bill, he may not say 5 words for the first hour. He doesn't need to. He's not trying to make people think he's smart. But trust me, when he starts talking, everybody starts listening. And it doesn't take long for people to figure it out. This is how you always have the young guy there who is smart. I mean, don't get me wrong. They really do have things to offer that just won't stop telling people how smart they are, right? It's just because they lack a inner confidence, and that comes with maturity and time and things.
One time I was in your office a long time ago. I can't remember what the context was or why I was even there, but there were some allocators in the room. Bill was in the room. I was in the room witnessing. I'm not sure why I was there. But anyways, these guys were giving a pitch to Bill, and it was going on and on. It was diarrhea of the mouth. I realized it was nonsensical. I'm thinking to myself, do you guys even know who you're talking to? In my whole head, I'm thinking this, and they just keep going on and on and on. At some point in time, I can't remember what Bill did exactly, but he basically pounded the desk and he said something like, I'm a trend following trader. It was like these guys just looked like they were deer in headlights, no idea what they're doing. And it's another one of those moments where exactly what you're saying. Like, he let these people just talk on and on and on and on. And he finally just stopped them.
That's usually my cue when that happens, whether Bill's there or not. And I'm the Bill at that time, is I just get up and walk out. I'm done. See ya.
I do love that about the fact that that was his attitude. You guys became work together, friends, peers, succession to you. And I love the fact that you keep that attitude because, look, you're right. Some people will listen to our conversation and they might not get it. Other people will listen and say, oh, you know what? That guy Bergin, he's got an attitude that's inspiring. I like that. He's not putting up with stuff. He's not a mean guy. He's just matter of fact. He's like, I don't want the drama, no mama, whatever, go away. That's important. I love that kind of stuff in a conversation, you know?
Yeah, well, I think it makes life easier and definitely more efficient. That's another pet peeve I have. I'm all about efficiency.
CPA, turn to CTA.
Maybe that's where I got it from.
That CPA background, I mean, every CPA I know is very efficient.
It's all about billing.
Well, listen, good stuff, Marty. I appreciate chatting again, catching up. We should do it more regularly, at least every couple of years.
I appreciate it that you're taking the time. I love it.
I will be in the States Turkey Day to Christmas. Maybe we can find a way to catch up.
Are you going to be in Northern Virginia or?
I will.
Okay. I still have a sister there. So if I get up there, I'll try to reach out to you.
Cool stuff, man. Appreciate it.
All right. Thank you.
I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.